Hi everyone. I've had the great privilege and honor of listing and selling a number of restaurants and bars over the last several years. One of the biggest questions that I get from both buyers and sellers is immediately they want to know right away, how much is this bar, how much is this restaurant really worth? There are really two values in the restaurant industry and bar industry that are in play here. First, what the seller wants to sell it for, and second, what the bar or restaurant is actually worth. I'm going to talk about a couple of ways which buyers and sellers can have a rough calculation on the value of an establishment that is currently open and doing business. What the business, what the restaurant, what the bar is actually worth. If a restaurant is closed, there are other valuation metrics which I'll cover in another video. Now, if you're thinking of buying or selling a bar or restaurant, it's really a good idea to have a professional appraisal done. This will take into account many things that this back of the envelope calculation, which I'm about to tell you, will not, like the economy, cost of assets, the age of the business, and so on. I'm speaking about a ballpark idea that helps give you a starting point and a rough idea of the valuation of the bar or restaurant you're either looking to buy or sell. There are two ways to do this. The first is called the seller's discretionary earnings approach, and the second is the percentage of sales approach. Let's talk about the seller's discretionary earnings approach first. What that is the seller's discretionary earnings approach is you take the seller's discretionary earnings of a business, and that's calculated by taking the net income of a business and adding back a number of expenses that a new owner would not have. For instance, the first expense you could add back is any one-time expenses the owners had over the last year in order to make improvements in the business. A new owner would not technically have those expenses going forward. So what you could do is you take the net income, add back one-time expenses, add back the current owner's compensation to come up with the seller's discretionary earnings. And the way that works is you take your seller's discretionary earnings, and what I'm seeing currently in the restaurant industry is I'm seeing around a valuation of 2 to 3.5 times. So if the seller's discretionary earnings of a restaurant is $100,000, that restaurant is going to be worth anywhere between $200,000 to $350,000. Now there's other variances and things that I've seen, but right now that's a good ballpark figure for what the market's bearing. Another way to do it is to take the percentage of sales approach, and the percentage of sales approach will give you another rough idea of restaurant and bar valuation. And the way that you do that is you look at the restaurants or bars total sales and you apply a 20 to 40% of total sales to get a rough idea of valuation. Now, the seller's discretionary earnings is not a perfect way to approach it. The percentage of sales is not a perfect way to approach it. But what it'll do is it'll give restaurateurs and also give buyers a good idea on what the restaurant or bar is currently worth. So again, the seller's discretionary earnings, you take that multiplied by 2 to 3.5 times, and then also the percentage of a restaurant or bar sales usually ranges between 20 to 40%. So if a restaurant is doing $1 million in sales, their rough valuation is going to be right around $200,000 to $400,000. So I hope this video helps. If you have any questions about it, please feel free to reach out, and I look forward to working with you.